So now we are in a crazy environment as well. We have the highs with big volume, and now it's important to see what's happening here, because if I see something like this, I can just pre-run it on the on the Nasdaq for correlation scalp trade. But I have to be very careful at these zones here. Yeah, because these zones are heavily selling zones. Let's see how the market is going to move. So if you saw the previous video, you saw taking me this trade, then my stop loss got like moved to the break even point, and at this point here I didn't want to give the money back. I just want to collect it a little bit and then have fun. Then I waited again for the breakout. Here also in the CVD you have the breakout right now, but there's no momentum here. We have the buying here, yes, but market is not giving me the momentum. You can see here they try to push, they push, but sellers are sitting here. You can see that push in the CVD. Sellers are sitting here and pushed from above like a big elephant sitting on your face. So yeah, this is the zone you have to consider not trading, even if you see something like this. If we hold above these areas here, you can also like trade the volume zone breakout as well of this, but you have to be careful of this high volume node over here. Yeah, so the best for you, if you like see something like this, you have the accumulation zone over here, you have the break. I just recreated the breakout here as well as here after not fulfilling the accumulation zone to the downside. I just try to break it to try to break out aggressively, and now this is the next accumulation zone you have to wait for. And if we break this, hold above these highs and then push to the momentum side, then you can be in a trade again. But here at these points, it's basically like elephant sitting on your head or whatever. And we don't want that. We don't want the elephant on my head or on your head. And yeah, so you can see here strong buyers are here at the top. If I just try to show you with the volume profile, where do we have the POC? We have the POC over here, which means most value or volume was accumulated at these lows. Here at the highs, we have the high volume node and low volume as well. So this is considered the low volume with the high volume node in it. And this is the high volume, high volume, high volume, high volume. So where does the high volume sit? Here at the bottom. That can be frustrating as well. What does it mean as well? You have passive buyers maybe at the bottom of this accumulation zone, which there would be like 99%, because we are going up again at these zones. But we also have no aggression at the top. So these are the two zones where we have to go through. For the sellers, we have to go through these zones and areas, and for the buyers, you have to go above these zones, even on the ES and the Nasdaq. And you can see it's accumulating. It's not very momentum-ish. It's just, yeah, waiting and waiting again. Most people get faked here. Most, because they try. But we don't want to try this bullshit. This is not tradable. It's fucking stupid. And why just you can just do this here, yeah, but makes no sense. You can do this, and you can do this as well, yeah, but do you really want that? Nah. You want momentum for this setup. Where do we have the momentum? Above these zones. Or if we come back to this low here and then see the momentum up again, then we have the potential to first retest the zones and see if they are still intact. If these zones are not intact, of course we will fall or break down to these areas here of high volume nodes to see if they are intact over there. So now we are just hitting the high volume node. It's important to understand, if the high volume nodes are there, you have to mark them. It's impossible to trade without them because they are always in your way when you trade the long or in the shorts. Because high volume nodes are created by big players, not retail traders. We can't do this here. This is not possible for us retail traders. And if someone tells you otherwise, they don't have any idea about trading and order flow and trading the volume profile with futures and whatever. And I think I said it before, but trading is the hardest profession to make easy money. Trading is the hardest profession to make easy money. And you have to learn that. That's the skill. You don't focus on making money, you focus on making a skill, develop a skill. If you develop a skill, the money will come automatically. But if you only focus on the money, nothing will happen. You're not going to be profitable. It's not possible. If you have that mindset switch, everything can be better for you. Because if you make, or if you learn the skill, develop the skill of trading and how to see the market, read the market in these environments, and it's not easy to read sometimes because they manipulate and spoof and whatever. But if you learn the skill of reading the market, not with the 5-minute candle, because this here, let me see. If you see at the bottom, let me see if I can do something like a line here. So from this start to this candle here, okay? There's a 5 minutes. And if we use the 5-minute candle here right now, you don't see what's going on inside the 5-minute candle. That's why I'm not trading like 5-minute charts, because you see nothing. You see nothing. It's stupid to trade this. We need to see inside the candles, and of course we can just do this one here, like the footprint chart. It's not developed here because I don't use it for the Nasdaq. Makes no sense to use it because the candles are too big to use the footprint chart for it, because then we have candles like this here, and yeah, at the end doesn't really make sense to have the big candle here, because then you need monitors like whatever big as the TV for one candle. Yes, order flow and footprint charts are good, but not for the Nasdaq, because the candles are not. This is basically the candle I see, and then you see nothing else, which makes no sense in this market as well. You can use the footprint chart here in the ES or S&P 500. The candle there is not as big as in the Nasdaq, because Nasdaq is more volatile than the S&P 500. So yeah, this would be the thing I have to tell you before you trade. Because if you learn the skill, the money will come automatically. If you focus on the money, you will stop trading because the money is not coming. Your why is not strong enough. If you have a strong enough why you do it, then it will happen eventually. If you stick to your plans, if you stick to your structure, to your rules, to your money management, risk management, trade management, if you stick to these things, they will become like automatically in your brain. Right now, it could be overwhelming because you have to do so much, but think of it like a driver's lesson. You first sit in the car and you can't do anything because you're not stupid, but you are not trained for it because you never did it before. But every time you have a lesson, a driving lesson, you get better, and better until you have the driver's test. And in the driver's test, this is the first exam, like to say, where you have to prove your skills that you developed over the time. The theoretical skill that you know what's going on, and then the practical part. If you have the theoretical part, then you can go on the practical part, which makes sense. But if you don't develop a skill or then you don't have anything to do in the market. You first need to do the theoretical, then you have to use the theoretical on the practical market, and then you're at the point where you maybe understand it. Then you're at the point of the break even. After the break even point, you are at a point where you make money out of it. And after that, you have the point where you scale your capital. Because your capital is going to be bigger, your risk is going to be lower, and at some point, with risk management, that's good. You can't even lose your money because your risk management is that good. But yet you have to develop over the time. So now I just talked a lot. Broke the new highs here in the S&P 500. Also here we are close to it on the Nasdaq. At this point we can just try to front run it because the ES is already broken out of the zone, which is an indicator for me that the Nasdaq will follow this structure, but I don't feel confident about that because we have sellers over here. Yeah, so let's wait and have fun watching the market and listening to my voice. You can see when I just try to front run it here, the market would get me stopped out. At the 25,000 we have liquidity laying. this is something I consider front running as well. So like 1 or 2 ticks below. And then we have the next zone where money is laying at the 25,100 in the book. But you can see it's a fake out. So there's no real aggression for the buyers. So yeah, if I'm not going above these highs, I'm not going to trade the longs. Because the first rule you have to like tattoo into your arm, protect your capital at all costs. There's nothing better than protecting your capital. And no trade is a good trade. But if you trade off like borrow them or whatever, you don't belong to the markets. You belong to casino. There you can like gamble or whatever. But the markets are not gambling. Or at the markets you don't gamble. Of course, you have risk when we put in money to gain more money, but we have risk everywhere. We have risk at normal work, we have risk driving the car, but we still do it. We all do it. We have risk going to sports, to get injured. Every time you have risk. Risk, risk, risk. Even if you fly in a plane, there's risk. Driving a boat, risk. Going on a walk with your dog because someone else's dog is going to be aggressive, whatever. Every time in your life you have risk, but risk takers take or make the most money at this point here if we like fix it to the money. Because if we don't take risk, there's nothing to make, to be honest. Then there will be zero. But if you take a calculated risk to gain more capital, to grow your wealth, then there is something to risk for. And if you don't have the money for trading futures, it's fine. You can just try demo account and do that until you are comfortable trading like prop firms or try trading small amount of money from micros. Don't just go in all in kamikaze. That's not something you should do. Learn, develop a skill, go into the demo account, try the demo account until you are consistent. Then you can look for a prop firm. Then you have to be consistent in the prop firm as well. If you don't want to do that, you can use small amount of money. Use the micros and trade the micros if you are confident in that. You either put more money into your account or trade the micros up. And then you can also use the prop firms again and then use a leverage by using more prop firms because this is the most common way to gain capital. You first pass your evaluation stuff, then you get the funded account. With the funded account, you get the first payout. After the first payout, you pay your next evaluation account, pass that funded account, and every time. And after that, you have a compound effect. You use your leverage to build more funded accounts and use the money after like whatever time you have made 10,000 euros, dollars, whatever. You can put it into your broker account for your own capital and then trade this as well. So this is the kind of leverage you have using prop firms. But prop firms are also really hard to do if you're not mentally stable because they play with your emotions because of the daily drawdown, and not every prop firm is going to pay out. So you have to be careful about that as well. And yeah, the trading space can be a shady place as well. But in every niche and every section you have shady stuff. In sports you have shady stuff. You have shady stuff in poker, as well as in business. Policeman, woman can be shady, but also good at the same time. Yeah, in every place and every niche you have shady stuff, but you also have the good stuff. And my focus is not on the shady stuff. My focus is on the good stuff, and then good will happen. This is all. Of course, when something is going to be stupid and don't and like users use stupid prop firms, they're not paying out, of course I'm telling them, because why the fuck should I promote something or tell them, hey, you can go there and to get the payout, blah blah, but they don't ever pay out. As well as with the CFDs. If someone is trading the CFDs, man, you're wasting your time, because it's like playing in a casino, because the broker is playing against your positions. You're not in the centralized in a centralized stock market. You are at the broker, and the broker is the casino. The casino always wants to win, and the broker can fake your positions out and then go against you. And they will do that because they want to make money, and they only make money when they liquidate your positions. So if you trade CFDs and listen to me right now, don't use the MT4, MT5 trader. Is not worth your time. It's stupid, and you never will make money out of it. For a short time of period, yes, but never make a constant income out of it, because you always play against the broker. The broker, as I said, doesn't want to lose. That's why we use broker that are centralized at the stock market for the index. And yeah, everything is fine over there, because they are heavy regulated, not on some bullshit island like Seychelles or Bahamas or whatever. They're regulated, and if they don't pay, they have to. They are in big trouble. So that's why. Never use the CFDs. I started with the CFDs as well, but I quickly understood that the CFDs are not worth my time, because you can't see shit. You can't see shit. You don't see what's going on inside the candles. You don't see limit orders. You don't see. You basically trading blind and only trading price action. Yes, I'm doing price action as well, but I use the options as well, the options data. Plus, I'm using the bookmap heat map with the ATAS heat map. I use the volume, the printed volume that's actually traded in the market. I use the CVD. What else do I use? Yeah, heat map, the options data. Then I use the data from the Xfeed, as you can see here, powered by the Xfeed. Yeah. So if you don't have that, think about trading, because basically you're not trading. You're guessing, because you don't have any real data. You can use Rhythmic as well, CQG as well. There are many different providers, but these are the best for me. I had the Xfeed and I used Rhythmic as well as CQG. Basic stuff you have to know before you start trading. Because trading is not for free. The platform, the software costs money. The data costs money. The options data cost also money. Then you have the prop firm, the evaluation, that costs money. Then you have the funded fee, that costs money. And yes, it can be hard if you're not trading profitable, but man, you find some ways. Trust me. If you really want something, you find some ways. And I can tell that by myself, because I didn't have much. I sold my first PS4 when I started. So I had no PS4 and I was really, really big grinder when it comes to playing games. All the time. All the fucking time. I played games. All day long. All night long. But then I thought, okay, at 19, at 18 years old, I have to change something, because I don't want to play the games. I want the player of my life. So that's basically it. I try to be the player of my life. And then I sold my PS4 and started trading. Of course, I had a rough time, because I started with the CFDs, but then I found a good guy that teach me, and yeah, made me understand how the market works and stuff. So, as I said, if you want it, you find a way. And if your why you do it is big enough, you never will stop. Never. And this is something you have to think about. You have to shift your mindset. You have to manipulate your mindset as well into the position that you really, really want to do it. If you like doing 2 hours a day, nah, it's not going to happen. But if you really grind, make screen times, back testing, forward testing, finding your edge, finding what's good for you, what's bad, how much can I trade and stuff. If you find these things with, of course, money management, risk management, trade management, then it will happen eventually. But the time didn't catch up yet. I said before I started trading, I'm going to develop a skill. Of course, I had first the money in my mind, but then I really, really fast like told myself it's not going to happen if I only focus on the money. So I had a mentor that told me to focus on the skill, to learn the skill, and after that I had a switch as well. So focus on your skill, not on the money, because when money doesn't come, you will stop. But when you develop a trading skill, then it will eventually happen that you make money out of it. It's the same with going to the gym. The first 6 months you don't see anything. After that you see little progress. But if you don't stick to the plan, you never will get it. Never. And this is the hard part. If someone tells you, hey, trading is easy. Yes, it's easy when you understand it, but at the beginning, if you have someone telling you trading is easy, they don't have any clue, to be honest. That's why. Trading, yes, is the easiest way, is the hardest way to make easy money, but it's really hard because you play against the high IQ guys. You play against the algorithmic high frequency trading stuff. You play against the spoofing and hedging and whatever. But if you understand these kind of things and get a little bit of knowledge into that, it will eventually become easy for you. And then, yes, it's easy. But to come to this point, it's hard. It can take some time. So I think there's nothing going to happen here right now. Maybe yes, maybe don't. I think I will cut the video. No, I'm not going to cut the video here. Just looking at the market. Again, here, big seller, big buyers at the top. And let's see how the market is going to react. Because this is something good right now for a new breakout. We waited for the accumulation zone to play out. They can do whatever they want to do in this zone here. And now we have this clean zone over here. The top, the bottom. And now let's see. If they reject again at the highs, breakout, fail, and then fake in again. So if we see something like this here, man, I want, wait, let me show you. If we see something like this here, the breakout, and then the fake in, I'm going to be, soon as this level breaks, I'm going to be short to the 0 gamma and or to the major negative volume. But if we hold this area here and accumulate above, then I'm going to be in here right now and then push the market to the major volume positive. These are the two scenarios I have right now. Okay, nice. Now we see 600 buyers at the top, close to the 500, where liquidity is laying in the book. Let me zoom in. I'm going to front run it here for aggressiveness, and then my stop loss will be below here, because of course here aggressive buyers came in, and if they fail to push further, even with 600 contracts, then I'm going to be out as soon as possible. And then my take profit would be over here. Stop loss where would be like in here or here. Here are the buyers in the book. Can't really see it because it's green. But yeah, there are the big buyers. Of course, I can just use this here, but as you can see, it's not worth doing it because first of all, I don't want to see these zeros and threes and twos and ones. I only want to see this big boy here. So now it's interesting. We are pushing below. And after this, at the top, again, it's hard. But what we can do is, I put my buy stop above this here, and then we can trade. So I can have a good breakout, because this is a pullback right now. It's nothing that I don't want to trade. But if you go back inside this accumulation zone here, below the zone, then yeah, I can consider trading a short, but my bias is long for the day. We make new higher highs. Only problem is that we have high volume nodes here. Wait, let me just do that. That's fine. And then of course I want to see momentum. If I don't see momentum, I'm not going to hold it more than that. So now it's important that the trade is going to run well. It's not going to run well. Shit happens. And then the next zone could be 25,100, because there is liquidity laying down. Also the 25,000 flat, there is liquidity. I think we can see a quick sweep through that level. If we break this level, this would be rapidly fast. And if we continue, then we have the next potential to the 25,100, and after that we have the 25,275 as a zone, which is good. But for that, of course, we need to break the highs, collect the liquidity here at the 25,000. And yeah, let's see. Let me show you here. So the liquidity is laying here, here, and also here, and then little small portions of that. So this is what I'm seeing here in the 50-minute heat map chart, as well as an hourly chart. This is a 300 tick chart on the heat map, 50-minute chart for my intraday bias. Right? So let's see. Let's see if you break the highs here and then collect the money. The ES is stupidly slow. The Nasdaq also not showing me anything that I like. And now I want to see the momentum. If the momentum is not going to play out, I don't want to be in a 500 stop loss. So I manage my risk really tight right now. Because the thing is, I want to see breakouts, and breakouts only happen when momentum is going to be developed. But here right now, you can see there's no momentum. I think it will go down and take me out, but I don't care then. It's fine. But we have the potential to go even higher here. And this is a very good risk to reward. Like 16 ticks, or not even 16 ticks, I think 32 ticks. 34, 30, yeah, 32 ticks for 600 ticks. It's good. It's a tight stop loss. I don't want to lose anything. As I put my stop below these big aggressive buyers, and if they don't hold, just also the high volume node, then fuck it, I don't want to be in it. But the potential is there. Also here in the ES, liquidity is above, which is good, because liquidity is acts like a magnet to the market. So now we broke the 25,000. And now let's see what's happening here. The market pressure is not that aggressive. Yeah. This is something I don't want to see here. Come on, man, break this stupid line. Yeah, it's rejecting. Yes, it's not really volatile as well, so yeah, let me just take the money. Don't give a fuck. It's good risk to reward again, but now, of course, now the market is going to develop. But hey, sometimes you have to get out if you feel not really well, and the S is not showing me anything that the market will go up. I don't know if there is a zone for the options level. No, not really. The S has the potential to go up to the 6,924.25. Then to the 6,935 odds level. So yeah, but as you can see, the market is not giving me the momentum I want, so why stay in it? So this is the like mindset with trading scalp video. I hope this is something you're interested as well, because I have to be open to give you the vision and also be extremely hard to you, because trading is a tough business if you don't really trying to understand it. So yeah, as you can see as well here, the exit was perfectly timed again for this micro structure wise. And then I will see you in the next video. Bye bye.